Wall Street Journal is reporting that China is ready to hit back if things get nasty and the U.S. pulls back on Chinese investments. Obviously, none of this tit for tat on tariffs and the like could either get worse or we could get signs from the Chinese leadership. And Xi Jinping had seemed to hint a couple of weeks ago that he was open to addressing some tariffs, Chinese tariffs on U.S. autos and the like, but we still haven't seen action on that. Greg, on if we have the upper hand in this trade fight or the Chinese do. What do you think, Greg?
Well, as a pure economic matter, the U.S. has the leverage. I mean, Chinese exports to the U.S. are roughly 4% of GDP. For the United States, U.S. exports to China are well below 1% of GDP. So they've got a lot more to lose economically. And frankly, because their exports to us are so much larger, we have more targets to hit. But that doesn't automatically win the U.S. That doesn't automatically mean the U.S. wins in any negotiation. You have to play your hand well. And there is a risk that the U.S. does overplay its hand.
There's another cynical view that we would be grateful, or the administration would be grateful for what would be deemed minor concessions on the part of the Chinese. And it might mean just, lowering the tariffs on U.S. auto companies coming in, or for that matter, forcing financial firms to share or hook up with Chinese entities to do business in China. Those would be significant developments, but in other words, it would not be as significant as the administration wants, but it would be something. In other words, I guess it depends on each side and how they play it, right?
Well, yeah, and that's why the Trump administration has to decide what is their end game. What do they want out of this? They themselves have correctly said that one of the mistakes prior administrations have made with China is allowing them to do this rope-a-dope, where they make promises but then impose like 2 or 3 year time frames and never actually fulfill them. Steel is a perfectly good example. I mean, the Chinese have been promising basically since the mid-2000s to reduce steel capacity. They've made at least 3 or 4 formal undertakings to reduce steel capacity. And in that period, steel capacity rose, creating a problem for the whole world. So to their credit, this administration has said they're not going to basically take half measures like that. But once again, they have to decide what is their bottom line. What are the time frames and the deliverables that they are going to hold the Chinese to?
You know, you've followed, obviously, the Chinese economy it grew to this economic juggernaut that it is in the world for some time. And I've always, in covering them, I've discovered that there's no way in heck some of the numbers that they report can be accurate. In other words, when they were growing at a quarterly basis of 10%, 12%, now, I know when you go from nothing, I mean, the big percentage increases and out of question. But even in this latest period, north of 6%, do you believe all that? Because it begs an issue that keeps coming up, whether we can believe anything the Chinese say or any commitments they might make.
Neil, if you'd asked me that question 5 years ago, I said, no, I don't believe it. But today I'm a bit more, I think, accepting of it because they actually have made good faith efforts to improve the quality of their data. And nowadays, when the numbers are funny, we don't actually know in which direction they're funny. Are they too high or are they too low? And when you look at things like trade...
Do you ever think they're too low? I mean, I could see a way to rig the currency by understating how much your economy is improving. But what do you think?
I don't really know. No, I don't. I guess I don't think they're really too low. I mean, we have seen a halving in their growth rate since 2008, from well over 10% to 5 or 6%. And I think even if that's, let's say, overstated by 1 percentage point, it's probably not overstated by more than it usually is. The trend is still there, a pronounced slowing. And Neil, this is why it matters in the context of today's trade friction. The Chinese economy is slowing. Everybody knew it had to eventually slow. It couldn't sustain 10% forever. It's a slowly maturing economy. A lot of the low-hanging fruit's been plucked, all the people moving from farms to factories and so forth. They now have an economy that is inordinately dependent on like rising debt to keep going. They're very worried that this sort of like bicycle is going to stop and then fall over. And so a trade war with the United States is a very risky thing for them. They have a very high incentive to try and escape this problem with the United States with a win-win scenario. But at the same time, Xi Jinping is basically pegs all his power to making China great again. He's a very nationalistic type president. And if the United States pushes China to make concessions that China believe really violate its long-term national growth, it will not agree to them.
Interesting. And he's under enormous pressure right now to follow up on a commitment he made 2 weeks ago in a speech to do some things, but he hasn't done that.
Exactly. I think that there was a commitment, for example, to end the requirement that foreign auto manufacturers always enter China in a joint venture. That, if they carry through with, is very significant. But there's my big if. if they carry through. And this is where not just the United States, but the U.S. allies who also have problems with China, like France, as Emmanuel Macron was making a point that Emmanuel Macron made many times, all those countries have to keep China's feet to the fire. At the same time, not insisting on demands that the Chinese simply cannot meet or will not meet.
All right, great, very good stuff, very good read on a lot of stuff. I appreciate it.